Hello, this is Andrew from Trend Following Mentor, and in today's little short episode we're going to talk about technical indicators and really the robustness of very simple ones. And the real key is that I really want to emphasize is successful trading isn't made or available because of indicators or systems. Really what I think is the most important issue is the winning psychology, a winning mindset. But what I really always work on is I work on very simple indicators. And today we're going to talk about just moving averages. And there's so many different programs where I've seen you have adaptive moving averages, you have, well, obviously exponential, but all different types of moving averages. And you have people that spend so much time developing these indicators, and what it seems to me is that what they really have not fully grasped is that any trade is 50-50, that no matter how good, if there's such a word as good, of an indicator or system, you can't avoid losses. You will have many trades that just don't work. And really what holds up in the real world are robust ideas, robust, simple ideas. The ideas, and you can never avoid a whipsaw. This isn't just my lovely thinking. Ed Seykota came up with it. He called it the whipsaw song. If you're looking to avoid whipsaws, don't trade. They will happen. They happen all the time to me. But I don't really get excited. I say to myself, how much is this trade going to cost me to see if it'll work? I know ahead of time that most of my trades don't work. And it doesn't matter. I have a handful of trades that do work that make up for it. And even my wording, trades that work. I mean, isn't like winning trades or I made money on the trades. They either work or they don't. It's a probabilities game. And you know what else? Successful trading is boring, as George Soros would say. I do the same thing over and over and over again and let the probabilities work for themselves. So talk about moving averages. Really, if something's going to work, it's going to be above that moving average. I don't care if it's an exponential moving average, a simple moving average, a 9, 18, 36 kind of moving average where you have three different lengths. The only way you're going to make money is when a trade really works. And that's the reality. I mean, you can have adaptive, you can have variable, you can have lagging, you can have leading, and I mean, you can go through so many different. If I open up Metastock or open up TradeStation or Bloomberg, and you pick your moving average. There's a zillion of them. But you know what the reality is? The only way you're going to make money is if something moves. It's got to move up or it's got to move down. The simpler you keep things, the more apt you are to make money. Focus your time and your energy on a robust concept, and I can help you if you want, that matches your personality. And really the bigger issues are risk management. How much are you risking per trade? What are you risking per sector? What is your total exposure? What's your total heat in your portfolio at any time? These are so much more important than an entry. Entries mean nothing. They really don't. And a simple example, when I'm talking about moving averages, the power of moving averages. Marty Schwartz, and I was really fortunate to have met him, he's really, if there's such thing as a guru trader, I don't know if it's a guru trader, but a fantastic trader. And for years, he was not successful. He was a fundamental analyst at a brokerage, and then once he started using very simple ideas, like a 10-period moving average, he started making a tremendous amount of money. I don't remember the exact percentage. If I tell you he made 25%, I think it's something like that. If you put it into context, it was 25% per month. There's a book. It's called Pitbull. I'm looking at it on my bookshelf. And this is what Marty Schwartz did. He used a simple moving average. He trades he trades S&P futures contracts, I think bonds and some other things and some big stocks. But he had very simple rules. Those are the only things that can hold up. But what he had is an ironclad personality. He was a Marine, and he learned what to be tough. This is the key. You can't just jump from system to system to system when you have a drawdown or a whipsaw. Those will happen all the time. What the key is, find something that matches your personality. Focus on the risk management. This is really the key. Have something robust, simple. Moving averages are simple. They work. There was another CTA, a commodity trading advisor, I read years ago in Futures magazine. Their strategy was, if it's above a 20-period moving average, or maybe exponential moving average, they were long, and vice versa. If it was below, they'd be short. If I'm not mistaken, they also identified the strongest, identified the weakest, looked at correlation, looked to try to put on low-risk bets where they're putting on a small percentage of their account on any trade. And they were written up in Futures magazine, just using an exponential moving average. All this overcomplicated stuff doesn't hold up in the real world. I've been trading 18 years. I support my family through my trading, and also allocating to other traders. And this is what I've seen. This is the reality. This is what I teach in trendfollowingmentor.com. It is not the Holy Grail. The Holy Grail doesn't exist. The only Holy Grail really there is the idea of taking a robust idea, robust methodology that matches your personality, stringent risk controls. And again, even if you put stringent risk controls, doesn't mean a trade's going to work. Has nothing to do with it. Just means that when the trades don't work, you don't lose too much money. Because there's only 4 possibilities. Big losses. The goal is to try, and I'm going to say try, to avoid the big losses. And then the next reality is you're going to have a lot of trades with a small profits, small losses. They're going to cancel each other out. And then the reality is you're going to have rare, not that you did anything special, you stumble into some great trades. You have to make yourself available. So if you have these big losses where you don't have stops, or you don't honor your stops, you won't be in this game. It's a very tough game, trading. It's not easy. It is not for everyone. But once you grasp what it takes to be successful, and stop searching for these magical indicators, magical systems, or think there's gurus out there, you're on your road to start beginning to make money. Potentially. Again, the only certainty is uncertainty. We're dealing in total uncertainty. And people want certainty, and that's why they want these sophisticated indicators. But that's not the reality. This is Andrew from Trend Following Mentor. If I can help you, I'm here to help you. I also have a book coming out with Wiley Books called The Bible of Trend Following, which talks about how professional traders compound money while they manage the risks. As well as, if you want, you can go to my page, trendfollowingmentor.com. I have a free 40-page manual on trend following. It'll give you some insights and some ideas. It's free. And again, if I can help you, I'm available to help you. They're one-on-one. We do one-on-one go-to meetings that we figure out what's going on with you, what you've succeeded with, what hasn't worked for you, and try to get you into a process that you can be a successful trader. And bear this in mind, 97% of the people are not successful. They quit and they lose money. It is possible to do this and be consistent. It's not easy though. Thank you.